Hello, everybody, and welcome to Confident Compounding with Corey Kramer. Today, I'm going to do a bit of a review video on AMD because I took some profits in an older position that I had, and so I've had questions in the comments about it, and just quite a few questions all the way around after the big run up that it's had. So I thought I'd make a little video, kind of clarify my thinking. And because I did have a buy video out on this one back in April as well here on the public YouTube channel. As always, it's not individual investing advice, just how I analyze stocks. So the story with AMD, I'll give the little backstory first. I have a video on the channel that came out April 7th of this year. So right at the bottom here, that's the fourth is the closest it gets. So the stock's up 150% since then. But I also purchased this stock, again, pretty much bottom ticking it. That doesn't always happen. Right around here in October of 2022. And I didn't have the YouTube channel fully up and running then, but I wrote a couple articles on Seeking Alpha about this purchase. So that was a good buy, obviously. But what happened was I took profits in it somewhere right around here in, I think it was maybe the second week in June or so. I sold half the position. It was up, I think, almost exactly 100%. And so I took profits, that says 123, but it was actually more like 100. And I held the other half for the long term. And the idea was that AMD might become less cyclical over time. And have like more of a secular growth kind of underpinning to it. So I almost always sell deep cyclical businesses, which pretty much almost all semiconductor businesses are. I usually sell those when the stock makes a new all-time high. This was kind of a bubbly peak here. So I was a little, basically the stock recovered so quickly played a role as well. And it had only been like a matter of months, like October to like June. It hadn't even been a year yet, similar to what happened this time. And so that was such a quick double that it just seemed prudent to take some off the table. And my basic return on a lot of cyclicals is 100% return. I wasn't sure if we'd be able to get these kind of bubble peaks again. Obviously, it did happen. But right after I sold the half, it did sell off quite a bit, so it had a sell off before AI kind of took over and pushed the stock even higher. So how it worked was I still had this half position that I had since 2022, and last week, I think it was last week, whenever it made this super jump, I sold that position in the Cyclical Investors Club. So this one that I had held for 3 years, it was up, I think, 267%. So I took profits in that one. The one from the position from the YouTube channel, which I bought using the same strategy, the deep cyclical strategy that I bought in 2022. So I basically added to my leftover position from 2022 on that April 7th. Of this year, and there's a public YouTube video on that purchase. So if you go back and watch that, if you want to learn more about the strategy and everything behind it, you can do that. As I mentioned earlier, one of the things with the strategy is usually I take profits when the stock reaches a new all-time high, which it just did. This was the last one around 227. Yesterday it was at 216, but it's basically right back at those all-time highs. And that's usually a good time to take profits, or I shouldn't say it's a good time to take profit. How my cyclical strategy is designed is usually to take profits when the stock makes new all-time highs, because I base my strategy off of the patterns that the stock has had in the past. So the thinking is, if the market, controlling a bunch of factors, but if the market was willing to pay $158 in 2021, if those similar conditions arise again, then I would expect the market to be willing to pay that same amount again, right? So that's the idea, is you buy it when it's in a down cycle and you assume that it will go on to make new highs or match the old highs that it had before once the cycle turns around. which it did, and more. So usually if they're in a secular growth trend, often they can trade and make a new peak, which is what it did. But I don't really have a good way to predict what these new peaks will be. Like, to me, sometimes they peak out at the old peak, sometimes they keep going. I don't really have a good way to determine that or estimate that, because it's in new territory. It's making new highs that it had never made before. So that's usually when I'm taking profits for the strategy. Now, the tricky part about this April one is it's really happened so quickly that there's a lot of portfolio considerations that go into whether to take profits or not, especially around taxes. This is going to be 100%, 150% gain in under a year, so it's not even in long-term capital gains territory. And so I don't usually take too much tax consideration into videos because everybody's situation is so different. But it does kind of work in the back of my mind. We also we took a relatively small position in this of like half a percent of a portfolio weighting. And so it's already a pretty small, this portion of it is a small position. And so my thinking was, I think when I put out the private video on the Cyclical Investors Club, when we took profits last week in that 2022 position, was for people that only had this new 2025 position, that's going to be probably tax dependent. Like if you have things to offset it, trimming by a third or something like that, I think is totally fine. But it might not be, because it might not be worth it depending on what your tax bracket is to do that when we really just have to make it 6 more months, without having the bottom fall out, in order to get into long-term tax category, long-term capital gains tax rates, which in the US I think is still 15% for most people. So, I'd be more inclined to take profits after we get into April on this newer position. But again, if a person can do it and it isn't going to cost them a ton, if it isn't going to cost them a third in taxes or something like that, then trimming by like a third, I think, is reasonable given this dramatic run up. But there still seems to be a lot of legs to the AI trade. And basically what I'm doing right now with this position is I'm just holding it and watching at least until we get into April. And then, I would consider selling it before then, I guess, but I would want to see some evidence that the AI trade is like dying out, like that there's real danger to it, reversing. So it's kind of a wait and see. I usually like to know when I'm getting out or the conditions I would like to get out of a stock, but we're kind of going to be in new territory here with this AI bull market. And it's a relatively small position, and I don't have a ton. I don't chase AI stocks. Like if I buy them ahead of time and I own some, but I didn't go out and buy them because of AI. I just still own them, right? Just like AMD. So again, I think having half or whatever, 2/3 for that longer term potential growth trend is fine. I mean, it's not super risky, I don't think, unless you have a big weighting. And then I would be more inclined to trim. So that's my update basically on AMD. I don't have a good method from here to determine when to sell. I'm just going to have to kind of watch the market, pay attention to the portfolio. Maybe I'll hold them long-term for the secular growth. I still have a similar position in Micron as well. We did take similar profits in Micron, which was also a public, it was a public video for that one back in April as well. So it's up the same amount, basically 150%, give or take. So a very similar situation. So some of the older positions I sold, but I'm holding the newer ones, and we'll see what happens. If I do sell this existing position, I will make a video, a public video on that, so you guys know, and I can share my thoughts at the time. I think it's probably going to be more macro oriented, or maybe if it goes up like another 100%, if it just gets totally crazy, maybe I'll have put a trailing stop on it or something like that. I'm not sure exactly what I'm going to do. Those two stocks in particular are kind of in their own weird category because they're very deeply cyclical. The stock price has shown you that even in the past 4 years, right? I mean, I've been able to buy it twice. That was down 65% that time. It was probably down 65% this time off its highs. So and that wasn't even during, I didn't get the bottom there, but it was probably down 65% there too. These can fall 80%. So you just have to understand that the downside risk is there, definitely there. I mean, we didn't even have a recession and it's fallen 65% off its highs in the past 3 years or 4 years. And Micron is going to be similar. So you have to keep, no matter what the AI story is, you have to keep in mind that those types of losses are real. And if they occur at a time where the economy is in a downturn, these incredibly fast rebounds that we've had might not happen. I mean, I don't think AMD goes all the way back to, the chart doesn't now go all the way back to 2000. Micron does, but the fast graph doesn't. I mean, it basically hasn't recovered since then, right? So when you get these gigantic booms, the downsides, not only can they be deep, but they can be essentially permanent. You're not going to want to wait 20 years to earn your money back once you're down 95% in one of these semiconductors. Do I think that's going to happen? Probably not, or else I would have just sold it. But you have to understand that it is a risk that's out there, especially the 80% drawdown, which I think is probably guaranteed in a recession situation or an industry downturn or a bust or something like that. Now, how fast it recovers from that is the bigger question. So I think it probably has more likelihood of recovering than the .com bust. But the drawdown potential is definitely still there. So I would much rather make my money buying, which I don't always get stocks at the bottom, but I basically got AMD at these two bottoms this past time, and also Micron. So, and I think we got Applied Materials on this drawdown as well. So the opportunities come along, and if you get them right, you don't have to take giant positions because you make so much money over a short period of time when things go perfectly right, which is kind of what's happened. Sometimes you have to wait 5 years for those type of returns, even if you pay a good price. So we've been fortunate to have these bounce backs, and I've just kind of taken most profits with leaving a little bit on the table. So it's kind of wishy-washy in the middle for these semis right now with the AI and combined with their deep cyclicality. But that's how I'm approaching it, in case anybody was wondering. So I think it's all right to trim a third if you can do so tax efficiently right now. And then maybe hold on to the other 2/3 to half, like right in there, for, if it just never comes down in the next 5 years or something, you got a little piece of it still to benefit from. All right. If you found this useful, let me know. I went through and answered everybody's comments. Finally, I was like 2 weeks behind. I apologize for that. Things have been crazy busy around the house here. And I have the tickers written down that if I replied back to you, I'll get them up on the chalkboard here soon. But I did get back to everybody. If I didn't reply to you, I must have totally missed it somewhere. And we're going to get back in the normal groove of things here soon with individual stock analysis. All right. Thanks for watching, everybody. I'll see you later.